Let's talk about Lockheed Martin, stock symbol LMT. You got war breaking out in the Middle East. Anytime you start seeing those headlines hit, like what you're seeing between Israel and Iran right now, traders and investors alike, they immediately start flocking to the defense sector. So you're talking about Lockheed Martin, you're talking about Northrop Grumman, stock symbol NOC, you're talking about L3 Harris, stock symbol LHX, and Boeing, stock symbol BA. But is this really the right play to make as a trader? Is this the right time to be jumping into those? So what I'm going to do in this video, we're going to look at LMT and just really analyze whether or not this is a good short-term trade, and also look at it from the lens of the long-term, all using technical analysis, and if there's any better options out there than LMT. So let's go ahead and take a look at that right now. So on a short-term basis, you have this consolidation that's taking place. It was trading as high as back in October, as high as 611. Now it's at 479. So it's trading at a much more of a discount than what you're seeing with Northrop Grumman and L3 and some of the others. You have this, with this consolidation, a potential area where it could be breaking out at, and it has yet to actually make that move above this resistance, but I don't think that it is worth jumping in before that resistance can be broken, because what you oftentimes will find yourself doing is you're getting into an unnecessary loss. And I always term those unnecessary losses as trades that you could have easily avoided if you just used some practical and common sense approach to trading. Here, you don't have the breakout, so don't jump in thinking that you're just getting in at a lesser price, and so you can get more shares or whatever and make a bigger return if it works out in your favor, because wait for the confirmation. It radically improves your chances of a successful trade if you wait for the confirmation. Otherwise, you may trade sideways for an extended period of time, or even worse, trade to the downside. And you're like stuck into a trade and you're thinking to yourself, why did I even get into it in the first place? It wasn't even breaking out. So wait for the breakout, I guess, in so many words. So if that breakout takes place, then I think it is a valid trade setup above like 491.50. You have the 200-day moving average, but if you look at it from a historical standpoint, it's been able to go above and below it without too much issue. There's a time here where it broke above it, came back down, tested it, and then bounced. But you can see multiple times it's been able to get above and below it with relative ease. So I don't think the 200-day moving average is all that important on the stock, and I wouldn't really calculate that into the trade setup. From a longer-term standpoint, what you have, and I'm going to pull up the weekly for this, you have a nice rising trend line. And why this is important is that just as much this breakout could be worthwhile, this rising trend line from a long-term standpoint could also be offering a good long-term opportunity here. Now, it assumes that the market isn't just going to go completely fall apart here in the next 6 to 12 months. If it does, that can radically change this whole dynamic here. But from a long-term standpoint, it's testing this rising trend line going all the way back to 2013 as recent as April, and it held that level perfectly. And it bounced a little bit, not much, but it still gives a really good entry price into this trade. You also, if I zoom out a little bit further again, you also have a rising channel band. So I don't think you want to say to yourself, if I'm getting long on this one, this just has unbelievable upside. You know, it's going to triple or quadruple in the coming years. That may not happen, honestly. And I wouldn't even go into the trade with that expectation, because you have some clear resistance here that it tested back in 2018, also tested it again in 2020, and just as recently as 2024. And each time it has been met with heavy resistance. So if you get that breakout and you get a move that takes you over the course of a year or 2 years, and it goes up into the 600s and maybe even close to 700 by that time, and it starts to struggle with it, that might be a good opportunity to take something off the table there. But from a long-term standpoint, it sets up pretty good. The only other real resistance level that I can really see here is right there at around 510. So if you get in at like 491, you may have some resistance at 510. But even then, you can see where in 2024, it broke right above that level and came right back down below it with relative ease. But there is still a history there that you want to be mindful of. Now, what about some of these other ones? So that was LMT from a short-term and a long-term perspective. But then you also have NOC. And NOC, if you look at it, it's trading near its all-time highs. I mean, the all-time highs is right there in the 550s, 560 area. But it really hasn't done not much to really excite traders, not for me at least. I mean, it's trading in a sideways range going all the way back to 2022. And so if you get a good move out of this whole conflict that's going on that benefits the aerospace and defense industry, Yeah, it could take it back up to the 550s, and that could be a nice 10% trade. But from a long-term perspective, I don't see what the value is there in it. You look at LHX, this one I feel like is more or less priced for perfection. It has some lingering resistance overhead as well that could come into play at around 262. And if it can't break through that, you could see a pullback there as well. And then Boeing, this is always on my do not trade list because I think it's very difficult to trade the stock with any confidence because there's always that headline risk coming out. We just saw it the other week with the airline that fell and a whole bunch of people died in it. So I don't see Boeing as really something that I would want to jump into, honestly. So LMT probably looks the best for me. When you look at aerospace and defense, we'll pull up that sector right here. It's kind of priced for perfection. So why is it priced so well? It's because of Northrop, because of L3. They're doing good, not because of LMT. I think LMT is very much lagged the industry as a whole, but if there's like this catch-up moment there, you could see an opportunity there to bank some profits over a long period of time. But yeah, I think aerospace is priced for perfection. I think there's some opportunities LMT, but not so much in NOC or L3 Harris. And the other thing you want to keep in mind is the fact that the war is going to continue to be a headline risk for aerospace, for the market as a whole, but particularly for aerospace, because the way that it's going to work, if there's escalation, yes, the aerospace defense stocks, they're going to increase. LMT, NOC, L3, Boeing, they should do well from that. But if the tensions start to de-escalate, then you're going to see the aerospace and defense stocks start to suffer. You also saw that this week here, where when they were believing that the escalation wasn't going to be as bad, the aerospace stocks did fall substantially. So you want to keep that in mind, that it's going to be a little bit more turbulent in the short term for these defense stocks. If things continue to escalate, they should benefit from it. If you enjoyed this video, I would encourage you to like and subscribe. And let me know down in the comments below, what is your thoughts on buying these defense stocks right now? What is your favorite defense stock? I'd love to hear from you and hear your thoughts. Thank you guys, and God bless.